The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the November 4th magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with some empowering beliefs. Let me pose this question to you. If you knew that everything was going to turn out okay, how would you live your life differently? How would you live it differently today? You see, the question for each of us is not what would we do if we had the means, the time, the influence, the educational advantages. The question is, what will we do with the things we have right here, right now? Because you do have an amazing power within yourself, folks. I say, live life fully while you're here. Experience everything. Take care of yourself and your friends. Have fun. Be crazy. Be weird. Go out and screw up. Because, guess what? You're going to anyway. So you might as well enjoy that process too. Take the opportunity, though, to learn from your mistakes. Find the cause of your problem and eliminate it. Folks, spend only 5% of your time on the problem, 95% of your time on the solution. Don't try to be perfect. Perfection doesn't exist. It is the lowest standard on the planet. Perfection does not exist. You can never attain it. Just simply be an extraordinary example of being a human being. Well, let's go check out the extraordinary examples of these markets here. Right now, Dow is up 12 points, trading out at 15,628. The S&P is up 1.5 trading at 1763. NASDAQ Composite flat, trading out at 39.21. Russell 2000 up 3 points, trading out at 10.98. NASDAQ 100 off 3 points. The NYSE, that's the leader in the clubhouse, up nearly 0.15%, up 15 points out here. Goldilocks back, it's up $6. My apologies, up trading out at $13.19.90. Silver is flat, trading out at $21.83. Light sweet crude up 30 cents after hitting that 2.618 expansion of its B2C swing point out there. Our call-in number is 877-927-6648. Give me a call, folks. We can look at your stock chart. Would love to. Let's start off by taking a look at the S&P 500 right now, trading out at 1763.15. The key here on this chart is that key reversal bearish engulfing session that occurred here on October 30th. That's the point. That's the line of demarcation. That's what you want to mark on your charts out here. The high of which is 1775.22. You know, it had that 1776 was the A to B equals CD pattern out here. Completed that, gave a bearish engulfing candle, gave you a key reversal session out there. That is going to be a key level to watch. Now, what we also know is inside the New York Stock Exchange, clearly, the summation index has turned down. The bears have control of the market. We're going to get a chance to see what the bears can actually do out here. Now, what's a normal pullback inside of the S&P 500? Well, I would just start off by taking a look at the swing points. The swing point from October 9th, the low, 1646.47, up to that key reversal session on October 30th. Dead cat bounce, 1726. That's something that we want to be paying attention to. 1695, not out of the question. Now, the key here is going to be, we're trading out at 1762. 1750 was the next primary trading range boundary line inside of the monthly charts. Monthly charts have more meaning than weekly charts, have more meaning than daily charts, more meaning than intraday charts out here. So 1750 is going to be key, because if all that we do see is a move down and tag 1750, tested a few times and holds that level, well, folks, that's another 200-point move to the upside out here. I'm not forecasting that. What I do know is what are the spots and what are the price levels that we need to be paying attention to. And 1750 is not a level that we should be overlooking. You get below 1750, that's what's going to set up your normal move down, your normal retracement, and, of course, volume. If we see volume expand to the downside, that gives you a signal, okay, more damage to come. Otherwise, if it's a light volume pullback, it's just setting up a normal harmonic move to the downside. We don't know what it is here just yet. We do know that the sign of a retracement, top, whatever it is that you would like to call it, that is in. That's that October 31st candle because it came at the completion of a pattern that was out there, and that's really all that you look for when it comes to trading. So 1726, 1695 on the cards if we see a close below 1750, but that 1750 area is key for us to pay attention to and observe. We go take a look at the Dow. What we certainly know about the Dow here is it's got this little 1,000-point consolidation move. That means not being able to break up through it. That sets up a possible move all the way back down to the bottom of that in the 14,719 level. Now, dead cat bounce 15,338. That would be an expected move on any kind of retracement out there. We did not get a key reversal session inside of the Dow, nor do I believe we got that inside of the Dow futures. All that we really received inside of the Dow out here was nothing more than a rejection of the top of the consolidation level. That's that 1,000-point consolidation. We did see a swing point tested with light volume. That was a swing point from September 18th. Couldn't bust that up. Now we'll try to bust it down. Well, the busting it down could take it to the 14,700 area. Russell 2000, as we take a look at the Russell. Russell gave a big signal out here, big old bearish engulfing candle, key reversal trading session, which took back an entire, 2, 4, 6, 8 trading sessions all in one day out there. And then we saw some volume, really big volume pressure inside of the Russell 2000. That took place on Friday. Now, if the Russell closes above 11:0130 out there, that would actually be a signal that it wants to resume its move. Could be a signal it wants to resume its move higher out here. That's in the Russell right now. We're going to watch it. It's hit that dead cat bounce at 0.382 retracement level. Did that on Friday. Bounced out of that a bit. Next area being 1070.48, your 0.618 retracement off of the last set of swing points out there. Of course, that would also break that trend line, which we've seen it broken slightly before. One trading session as the June 24th low was made, and then immediately got back above that trend line. And then we saw it just kind of really hunker down right around that area. We saw a slight break of it on August 27th, got back above it the next two trading sessions, back below it on August 30th, back right up in the following trading session, and right back up above it. We saw 2 more days where it was below there on October the 9th. So it looks like, another break into the 1070 range would be likely target for the Russell 2000. Inside the NASDAQ composite right now. You got the composite here. This has really been just trading sideways here ever since the October 18th time frame. Did have a key reversal session. Where was it on the composite? Where was that? In any event here, just really moving sideways. So the composite not exactly giving it up, not at least yet. Same thing inside the NDX 100 here right now. You can see that same move out there. The NDX 100, it's not giving it up. That's all that I can say at this stage. It's just simply been working off an overbought condition out here. So the big bullish hope is going to rely upon not the Russell 2000, but the NDX and the composite out here. New York Stock Exchange, if we go back and take a look at the NYSE, New York Stock Exchange giving us a nice 3-drive to a top pattern, a key reversal session, bullish, bearish engulfing candle, gave it all to us. That says that 98.65 is most certainly in the cards for that. That would be a normal move. Of course, if we take a look at the NYSE on the weekly chart, this is the monthly chart out here. We did finish the month. And the month of October left us inside the swing point from October 31st. And while prices inside that swing point, you cannot rule out a test of a high when you're inside a swing point, whether price is moving up, you can't rule out the test of the high. Likewise, if price is moving down, you cannot rule out a test of the low of that area. And inside the New York Stock Exchange on the monthly, it is inside that swing point. Let's go check out the weekly, see what that is doing. No weekly reversal session here, just a pause button. That's all that was hit here last week. The bottom of that swing point, no, on the weekly chart, it has not even hit the bottom of that area. It looks like it's right around the 10-160-ish, probably 10-163-24. I'm guessing that's why I've got that yellow box out there, so I don't have to go look it up. That's on the New York Stock Exchange. If we go take a look at I know what I want to do before we go take a look at the ETF structures out here. The transports, something to think about. The transports this morning are up and over resistance. Now, resistance in this case here was this bearish engulfing candle that took place on October the 30th. The high is 70.62.16. Not a key reversal day, but that was a bearish engulfing candle that said resistance would be the high of the prior session. There was a bit, was that the high? Because that was 706.4.67. It's trading at 70.85 right now. So the transports are not backing down. Of course, it's early in the trading session out here, but if in fact you see a close above 70.64.67, you've got the transports actually breaking out. Let's take a look at their A to B equals C depends. Let's look at the small one out here on the trannies. The transports here above the 1 to 1.272, so a breakout of this pattern here says that it would like to travel up to about the 72.40-ish type range. That's the smaller AB equals CD pattern. Let's take a look at one that's a little bit larger, the one coming off of the low on June 24th, up to the high on August 1st, and then back down to a low on August 30th. Let's change colors on that. The 1 to 1.272 says 71.69. So the only thing here breaking out so far this morning is the transports. Let me take a quick peek here at the SOX. I need to grab a quick swig of water. Sorry about that. Folks couldn't wait the 2 minutes for the next break. I'm out there just a tad dry. The SOX, though, not breaking out, so no breakout there. Just the transports giving us a signal inside, a bit of a signal inside the market. Now let's go take a look at the ETF structures out here. Let's take a look at the SPY here. Traveling just slightly higher from the close on Friday. The key number here inside of the SPY is 177.51. A breakout above that level. And where would price head up to? I'd say head up to the top of this rising price channel, maybe even the 182-ish mark out here. But first, it has to take out that resistance from October 30th, 177.51. The normal pullback on this, back to the bottom of that rising price channel in the 172-ish range. That's your dead cat bounce level, your 0.382 retracement from the lows of October 9th to the high of October 30th. Let's take a look here at the diamonds. If we take a look at the Dow Diamonds DIA, you can see there's that consolidation range. So the number on the diamonds to be paying attention to, 156.87, the high of October 30th. Normal pullback at least is the dead cat bounce area. That is a 153.08. That is your 0.382 retracement. That's where you would also see price move into the trend line, the rising trend line out here. But horizontal support and resistance, horizontal moves having more of an impact here, and it's really the consolidation that I would be more so paying attention to than. And if the market does pull back, the Dow Diamonds ought to pull back into that 147-ish level. Right now, the Dow's up 16, S&P is up 2. Be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 11. S&P is up 2 points. Let's round this thing out. Take a look at the other 2 ETFs. The Qs out here. You can see the Qs right now trading out at 82.82. Just sideways moves out here over the last 5, 6, 7 trading sessions. So no real breakdown yet inside of the Qs out there. We take a look at the IW. Did we look at the IWM? No, we don't think we did during this hour here. Let's take a look at the IWM. That's one where we're seeing the biggest breakdown out here. No, I think we did take a look at. If I already covered this, my apologies. The IWM here looks like it's trying to pull back into the 106.29 level out there. Let's go take a look at the King Dollar U.S. Dollar Index. Here's the daily chart. We did see the U.S. Dollar Index on the daily chart break that descending price channel. That's right. We want to change that to red. Don't want to grab that. Let's grab this. Oh, well, darn it. Let me see if I pick. There we go. Nope. Son of a gun. Can't grab it. It's the blue down line. That's blue. That's the blue line that you're taking a look at in my chart out here. That is a little descending price channel. Price broke above it with some conviction here on Friday. You know, when you break a price channel, it's not unusual. In fact, most times, you prefer if you're bullish or bearish. You prefer to see a test of that channel line and, in this case, hold out here. So it's pulling back a bit, and we'll see if that's a real break. It still has a larger A to B equal-CD to the downside to complete, but that big move on the euro pulling back out there on the weekly chart, we'll show that in a moment. Let's take a look at a longer-term chart here for the U.S. dollar index. Let's go from the daily to the weekly chart out here, and a big, wide-ranging bar here last week. Of course, brought to you mostly by the Queen, by the euro. But what you can also see here is the U.S. dollar index, in order to really get back into any kind of uptrend, is going to have to break back inside that rising price channel out here. That's got off to a good start last week with that big wide-ranging bar out there. So says that the U.S. dollar index on the weekly chart now, if we take a look at the areas here of support, we'll just put a black line across my screen here momentarily. You pull this up just a bit, you can see where the U.S. dollar index pulled back to last week. That is a strong area. In fact, I'm going to get rid of the A to B equals CD down here at the moment. Horizontal, let's get rid of this candle session as well. There we go. Now it's cleared up. So you can see this is a weekly chart that we're looking at. Strong area of support as the U.S. dollar index pulls back into that 79.06 type range. Each time down there we've seen, the last couple times down, we have seen some nice big bearish or bullish candles out here. Last time down here was the February 8th time frame. So nice big wide-ranging bar taking back 1, 2, 3, 4, 5 weeks. 5 weeks, just like when we take a look at the euro, you'll see it took back 5 weeks. So the U.S. dollar index, obviously with the euro being 53% of the weighting structure inside there, just be paying attention to what's going on inside the Queen. If we take a look here at the, speaking of the Queen, you'll see a daily chart. This is right now pulling back into an area of support. That's this last breakout session from September 18th. Also, you've got old resistance lines out here. Resistance lines being that bearish engulfing candle on the daily session on June 19th, and then you had a little piercing candle on August the 21st. That is a line of support down right around the 1.34-ish range out there. That's what's going on right now with the Queen. If we go check in on patterns, let's go look and see what's going on around the world out here. The Nikkei, you can see here, the Nikkei was closed last night. That has really just been consolidating here. If we take a look at that consolidation pattern, that's running from, we'll just take a look at this shorter-term consolidation pattern. This one right here that is trading. So it looks to me like the Nikkei wants to get down and test the bottom of the consolidation. That would take us into about 13,749 out here. A breakout of this to the upside or the downside should be equal to the price move of that consolidation. It does have a really nice longer term, I do mean longer term, Gartley buy pattern. This is the one that I am being patient for, and that is a 0.618 Gartley buy. That's coming off of the lows from November the 15th, 2012, all the way up to the high that was put in on the trading session of May 24th. Big reversal session out there, big key reversal session, big bearish engulfing candle there. You've got a 1.272 expansion of a set of your B to C swing point, and you've got your 0.618 retracement from that low to the high out there, coming in right around the 11,673 mark out here. So I would like to see a break of this consolidation pattern that is on the screen. You can see if we move that down, that gets us down a lot closer. Still going to need more movement if it breaks the consolidation pattern to get to 11,667. But I say just be patient and wait, because we might be able to buy the Nikkei at a very nice price. 877-927-6648. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 20 points right now. S&P is up 3. And let's continue checking in on some of these markets across the globe here. We've got the FTSE up on my screen. We've got the monthly chart in the FTSE. And you can see FTSE here is trying to get up over its highs, taking us back into 2007. Made a high in July 31st out at 67.54. It got up to 67.51 in October of 2007. I tried breaking out in the May of 2013 timeframe. Failed to do so. Tried to again here last month, October. Failed to do so. This month here it's above that level. And now if I go back and you can see the rising price channel coming off of the 2009 area. But let's switch this over to a weekly chart. It's this week that we're going to really want to be paying attention to because you can see the weekly chart showing that same resistance level. And right now in that resistance level, we'll use the high of, so you're looking for a close above 67.52 is what we will call it. Right now it's trading at 67.72. That would be coming into this Friday here to find see any kind of breakout inside of the FTSE. So it is trying to get up and over its 2007 areas. If we go take a look at the DAX in Germany, We'll start off by taking a look at its monthly chart. It did break out above its 2007 highs as well as its 2000 highs out here. So the DAX here had been traveling in quite a consolidation zone. Let's go just simply mark that. We'll color that in. I would say this is the consolidation, the real consolidation. It's inside of the DAX. So that's from a low of 3,618. We'll just call it 3,600 to make math a little bit easier for me, Stevie. So 3,600 to 8,150. So you got 36, 46, 56. So you got 4,000, a little over 4,000 points in the DAX out here. That says that the DAX eventually wants to get up to the 12,000 range. Right now it's traveling out at 90, 40, 99 out here. The DAX here, when it broke above that level, came back inside that consolidation. During the month of June, it broke above it in May, came back inside, tested it, got back above it on July 31st, came back, tested it one more time in August, and it's been off to the races for the DAX out here. This is a monthly chart that we're looking at inside of the DAX. Big breakout of its consolidation, just like we're taking a look at our U.S. markets as well out here. Let's go take a look at the daily time frame, see what this is doing on a daily chart inside of the DAX, and no real breakdown sessions here just yet. It's completing the 1 to 1.272 on a daily chart. A to B equals CD. That says 91.05 is where it would like to trade up to. It's been as high as 90.70 thus far. That is inside of the DAX. Let's take a look here at the Shanghai. Let's go see what the Shanghai is doing. This is the daily chart, but let's go look at that's big reversal, big old hammer candle that took place here on June 25th. Again, this is a daily chart that we are looking at on my screen. But let's take a look at a longer-term time frame. Let's go see what the monthly, let me get rid of those volumes, don't mean anything. Let's take a look at the monthly chart. And the monthly chart not really showing a whole lot out here inside of the Shanghai from a trading perspective. Consolidating, actually moving lower, a bit of a channel line out here. Let's see if we can try to identify what that might be. So if we look at the down channel, I would be starting here from August 31st, 2009. Yeah, so there's basically your channel line. Let's say probably right about there is a good channel line. So here is what the DAX, let's see, on the bottom, if we mark the bottom, that's pretty, I'd say about right there. Let's change that to red. So there is the, if we take a look at the Shanghai monthly. So if the Shanghai is going to break out of its downtrend channel, and this is the downtrend channel taking you back into the top of which is August of 2009, that would be very bullish. But you can see since 2009, really been in a very strong downtrend channel. And that's what helps in taking a look at some of the different time frames that are out there. So now as we switch back to the daily chart, here was that competing uptrend channel that I was originally looking at. I'm going to get rid of that as we speak here right now, but you can see just simply by taking a look at the monthly gives you a better perspective as to what it is doing and or whether or not a breakout would occur. So that was August of 2009. The problem is I have to squinch. That's not really a good word. It's not even a word, right? I have to condense this so much on a daily chart that I can't pick up the co-located open or close out here. So we'll just pay attention to the monthly chart. And that was of the Shanghai. Let's go take a look at the Hang Seng. Let's put this thing on a monthly chart, see what it is doing. It looks better than the Shanghai does, but let's take a look at the monthly chart here, see what it is that we see out here. Let's see if we can identify the rising price channel out here going back to 2009. So you can see how this looks much better. We'll use the open session from March 31st of 2009, and I'd say that is pretty good at setting up the so right about there is the bottom of that channel line. I would say the top. You've got two co-located, 1, 2. Let's see if I move this a bit lower. Yeah, it's probably just somewhere right about in there. In any event, so you can see that this is the Hang Seng is looking much better than the Shanghai. It's got some resistance for sure. Again, it's a monthly chart we're looking at here, but it did create this little piercing candle right back here the month of February in 2013. So it closed above 23,944, and that will confirm an A to B equals CD up pattern. That A to B equals CD up pattern here looks like this. That would be inside of the Hang Seng, which looks better than the Shanghai does out there. We'll go ahead and leave the longer-term charts on the screen and continue to pay attention to them. Let's take a look at light sweet crude, see what it is doing here as we speak right now. Just not doing a bunch. It's up just a tad. It's up a total of 12 pennies here right now, but this is coming into what should be a area of some decent support out here. It needs to work off this oversold condition, and it can do that just simply by moving sideways or bouncing higher. Any bounce higher, I would think a resistance is going to be that $99 level. That's the black horizontal line going across my screen out here. Let's take a look at the 30-year Treasury, which this morning had bounced off of the rising price channel. That's the blue diagonal lines that you're looking at on my screen. If you're watching us on Tiger TV, of course, it's found resistance. It has tested. It has tried to get back inside that longer-term consolidation pattern, the one that began back in August of 2011 out here. That really says the 30-year Treasury wants to get down eventually into the 117 area. So we'll see if the bottom of that the bottom of that consolidation level, if it continues to hold as resistance. Let's see here. Gold, silver, not doing a whole lot. Gold is trading up $4 right now, so not a big deal there. Gold looks more like it wants to move lower, at least into the $12.93 range out here, but it can convince me otherwise with the close above $13.27.30 today. Right now it's trading out at $13.18. Silver doing absolutely nothing. It is down a penny right now, so just really a sideways range out here. The uptrend up channel line here is still holding as a pretty decent support level, and that is inside of silver. Sorry, we keep getting dust. Excuse me there. Let's take a look at some of the sectors with inside the S&P 500. Let's go see what we've got going on sector-wise. Let's start off with the XLF, the financial sector here right now. That is traded down into that rising price channel. Those are the blue diagonal lines you're looking at on my screen. You can see slightly below that area would be the trend line. Thus far, holding as support. Came down into it on Friday with 33 million shares. Thursday, 48 million shares. 35 million shares on October 30th. A sideways move today so far, about 4 million shares in the first hour and 15 minutes of trading out here. So no real breakdown here inside of the financials. That's also on that move down with 48 million shares was going into 53 and 75 million shares to the upside. Those were the rescue ships that were going and rescuing that island reversal candle back there. Those rescue ships showed up on October 16th and October 17th. So the financials are going to need more volume to the downside for the market to reverse significantly out here. That's on the XLF. Let's look at the XLK, doing absolutely positively nothing. A doji candle is formed at the moment. 33.76 is what it is trading at. It opened at 33.76. So again, now you did get on the XLK. We did get a key reversal, bearish engulfing trading session on October 30th. That says that resistance now is the high of October 30th, that price level, 33.92. So in order for the market to continue higher, it's going to have to break above that level. A retracement inside of the XLK, normal retracement from low to high out here. That would take you into the breakout, 32.95. The low of the breakout is October 18th, which is 32.91. Broke out with 7.9 million shares there. The pullback on Friday, only 4.6 million shares. Let me just update, make sure I got the proper volume out here. Give me a moment to do that. Yeah, only 4.6 million shares on the trading session of November the 1st. That was on a Friday. That's what's going on there. Let's take a look at the XLV, the health sector inside of the S&P 500. It too, key reversal session on the trading session of October 30th. They were all over the place out here. That says resistance is 53.50 inside. And if you see it close above 53.50, well, then 53.89 would be next up on its cards. That is the 1-to-1 A to B equals CD pattern out here. Let's take a look at a smaller A to B equals CD pattern. The trading session September 19th had 6 million shares to the downside, and it was passed with 7 million shares. So let's take a look at a secondary confirmed A to B equals CD pattern. Well, that it completed as it did the key reversal session on October the 30th. That's why apparently I don't have that on my screen. Today, just a sideways, a little bit higher move out here. No real volume behind the move, 960 800,000 shares going into 8.2 million shares from October 30th. So it doesn't have the volume to push itself to the upside. That was on the healthcare sector, XLV. Let's check out the energy sector, the XLE. Let's go see what it is doing out here on the daily charts. Then we'll do is go take a look at the weekly charts for all four of those ETF structures. See if we can locate it. We got a caller. We got Ken in Fort Madison, Iowa. Ken, thanks for calling. Thanks for holding. Didn't see you there. Sorry about that.
That's okay. Good morning.
Good morning. How are you doing?
I'm doing great so far.
Excellent. You have a nice weekend?
Very nice, yeah. I had a little rain, so we needed, so things are looking good.
Okay, excellent. You wanted to take a look at ticker symbol CSU?
Yeah, it's Capital Senior Living Corp. I don't own it. Their earnings are going to be reported after the market close. I just wonder what you thought about it.
Have you been looking at this for a while to get into it, or what's your trading?
I am just now looking at it.
Just now, okay.
I haven't owned it.
Go ahead.
I have not owned it. I do not own it.
Okay, all right. So we're looking at ticker symbol, folks. It's CSU. It is Capital Service Living Corp. It's trading out at $23.50 here right now. A normal volume on this equity, so it's a pretty thinly traded equity, 100,000 shares or so per day. Now, it had a nice trading session on Friday, 518,000 shares. Anything special behind that bullish engulfing candle and move out there that you know of?
Not that I know of, no, except that their earnings are going to be reported, and that's all I know.
Okay, all right. Well, good enough. If we take a look at this on the daily chart, it's beginning a uptrend move. The question is just a counter-trend rally. So what I first start taking a look at is, let me just put on this little tool here, Pesavento Patterns, take a look at the expansions and retracements of swing points. So what it's done here today, Ken, is it made that, looks like it made a Gartley buy pattern. A Gartley sell pattern. In this case here, I'm using the shooting star candle from July 11th. So we're taking a look at technically what the setup is here. So if I go from July 11th's high down to the low on September 6th, all the way up to today's high, what we'll see is a 0.618 Gartley sell pattern. Now, it gapped up in that area. It has sold off, but that gap is pretty important. If this gap doesn't get filled today, on the low of the gap is going to be, which means not trade back to 23.18. So far, the inter-session low has been 23.31, and volume is not too shabby behind this move, 156,000 shares in a little over an hour. So it seems like it also has volume today, just as it did on Friday. If it can move above this level here, then the next area is going to be the 0.786 area, which is 25.33. But it has begun to show signs here on the daily chart of wanting to move higher. So now the question would be, where is it that you would step in? Well, let's actually go take a look at a weekly chart, too, because you're looking at this as more of a intermediate term holding, would you say, Ken?
Yeah, or short term.
Short term. So let's take a look at the weekly chart out here. So what do I like about the weekly chart? Well, take a look at that weekly chart. This is a reason why you should be looking at it. Right, this thing has had one heck of a nice move off of the lows. Back in 2011, went from about $5 and change all the way up to a high out here on the trading session of March 15th at $27.90. And the pullback so far, if we just simply go from those lows, Ken, can you stay on through the hold?
Sure.
Can you stay on through the hold? Can you hold on through the break? I'll get it out. We're going to go back to Ken in Fort Madison, Iowa. We're taking a look at CSU, Capital Service Senior Living Corp. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Right now we've got the Dow is trading up $1.80. S&P is up 250. We're on the line with Ken in Fort Madison, Iowa. The ticker symbol we're looking at is CSU. Now, Ken, during the break, and I know you watch us on Tiger TV out here, during the break I took a look at the weekly chart, and the red squiggly line that you see on your screen out there, yep. What I did was I overlaid the S&P 500 on this stock. Now, this trades on the New York Stock Exchange, but I just went ahead and overlaid the S&P 500. We can see that this equity here seems to track pretty well, with the index, what you would expect. I just wanted to see if maybe this just simply ignored any kind of reversal signs or anything like that out there. So here's what I'm going to suggest. Now, the other thing, I wanted to see, how this was tracking with regard to the markets. The second thing that stands out to me on this chart are these high-volume trading sessions. Now, they're not really wide price spreads out here. I guess the widest price spread sort of on the September 28th level. But what stuck out to me was when I went from the trading session low in October of 2011 up to the high that was put in, had a nice run. The 0.618 retracement level is just a normal movement in the stock, takes us right back into these high-volume bars, specifically the one from September 28th, which would set up a nice Gartley buy pattern on here. I don't know that it's going to pull all the way back there. I mean, that would be a pretty decent move to the downside here, and it's got some pretty decent support at the lows here back in September around the 1987. I would say this to you. Don't try to step in front of this before the earnings release. If the S&P 500 gets above its highs from October 30th, because this moves with the S&P 500, and this is an equity that you're looking to get into. So if we get a break above resistance, and this thing doesn't fall apart or something after earnings, so tomorrow, when it's trading or what have you, I would go ahead and time my entry knowing that the markets have broken above the area of October 30th, which is some resistance out here. And that's how because it's a nice-looking stock chart, I'm concerned with those high-volume weeks out here. Not enough to not take the trade, but I would go ahead and try to line this up with the actual index itself. Is that kind of making sense, what I'm suggesting?
That's very good. Thank you.
Yeah, so it's a nice uptrend out here on the weekly. Nothing suggests it's falling apart here. Would form a nice Gartley buy. I don't know if you'd get it, but if the S&P, if the New York Stock Exchange is on the New York Stock Exchange, let the New York Stock Exchange get above its 3 drive to a top pattern, because that's a significant reversal pattern out here. And what it also means is if it fails, it just tells you how strong the market is underneath. And then I would come back into this equity here, see what it's doing, and go ahead and pull the trigger to go along on it. All right, Ken?
Hey, around between $19.80 and $20.
I would. The way I would take a look at it is if the market's breaking out and this is still looking good, I don't know that I would worry about where. I just put a wider stop on it. But this because it goes along with the markets. If the markets are going to break out and this thing is a nice looking stock chart, then I'd unless you saw some other signal, I would just go ahead and take an initial position in it.
Okay. Thank you so much.
Hey, you bet. Thanks so much for calling. You have a great day. Folks, stay tuned. Basil Chapman is going to be up next. Don't know if Larry is here with us today. He's either going to be Basil for 2 hours or Larry coming up after that. And then we've got Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Right now, the Dow is off about $2. The S&P up $2. So it is a pretty flat market as we speak. Remember, the Bears have control. Mentioned the New York Stock Exchange when Ken and I were out there. 630 net advancing issues, not too bad, but the Bulls need 882 or more in order for them to take back control of the markets. Have a great Monday, folks. Look forward to talking to you or seeing you in the morning. Take care.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.